Welcome back to the channel. For Palantir to get back up to its peak of $45, I kind of want to get into the depth of it and talk about why Palantir is facing a huge battle to get back up. So if you're back holding at $45, this video is just for you. Now of course, if you have seen my previous video, you guys would probably already know that I'm super bullish on Palantir. In fact, by the end of this, I'm going to show you guys how Palantir stock is worth at least $100 over the next few years. So here's the most simplified version that I can come up with. If you look at the two major dips here, what's the one thing that you have noticed? Well, if your answer is earnings, then you are partially correct. That's only one part of the truth. It's the combination of interest rate, Reddit meme label, and earnings that results in this collapse. And this is definitely not a coincidence, right? Because the thing is, growth stocks like Palantir can be very volatile and difficult to value. But more on that later. Essentially, strong growth companies need to overcome two things. Maintaining strong growth targets, in other words, increasing their revenue and earnings at a faster rate than the average business, in this case, the pure play AI industry, and two, the ability to scale and adapt to market demands. Now, growth stocks are overvalued for a reason. Many times, Wall Street are willing to overlook at overvalued growth stocks because these emerging companies have proved to provide massive return. In fact, some of my best return have been stocks that were called overvalued when I first bought them, like Neo, Plug Power, and Virgin Galactic. And we all know what happened next. So it's a matter of if you want to make high returns or follow these muttonheads who have labeled them as overvalued. Speaking of valuation, if you are familiar with the growth stocks valuation, then metrics like price to sales ratio, enterprise value to revenue multiple should come into mind. Generally, the lower the ratio, the cheaper the company is. Let me show you a few examples of some of the most premium stocks that are trading at sky-high multiples. As you can see, Zoom, Shopify, and especially Snowflake with premium valuation. And of course, Palantir with price to sales ratio of over 41 and sales multiple of 40.16. Basically, the stronger the sales multiple, the harder it is to justify the premium valuation. At the same time, the higher the valuation, the more are expected in terms of future revenue growth. That explains why Snowflake's sales multiple is way higher compared to Palantir. It is the growth track record in Snowflake that makes investors willing to pay at premium price. In this case for Palantir, what this means is that Wall Street is expecting Palantir to grow at a rapid rate. Unfortunately, when that expectation failed to happen, Palantir shares collapsed down by as much as 9% on a single day. And that's the reason why Palantir is still at the $20 range, because investors are simply skeptical of Palantir's revenue growth in the upcoming quarter. For all that being said, why now is the best time to buy Palantir stock? Palantir was initially designed in such a way to win government contracts. I don't want to get too in detail on how their software works again, but the point is, today Palantir is a completely different beast and has scaled their business model to be adoptable by all commercial and government-related agencies. Commercially wise for Palantir, there's so many opportunities lying ahead. Palantir so far only worked with a small fraction of the Fortune 500 companies, so the growth potential here is no doubt massive. Here's a fact. Palantir commercial revenue increased 19% to $133 million in the March quarter. In the two previous quarters, commercial revenue climbed 4% and 35%. It's not rocket science for anyone to know that Palantir's commercial segment is clearly not up to pace yet. That then raises the question, what is Palantir's game plan to expand and get into full swing? Well, in the first quarter alone, Palantir had made nearly 50 hires into their sales team. They continue to win deals in multiple regions, so we know there's a bunch of momentum there. In this regard, Palantir still has a lot to offer. Imagine it this way. If someone dives too far with all the AI jargon, customers are likely to fall back on the business lingo and either get confused or bored. Instead, what Palantir plans to do with the sales team is to prevent all this and create much deeper understanding of the products and the value customer can unlock, to the point where the first meeting today really feels like the fourth or fifth meeting from a year ago. If anything, it is really evident that Palantir's commercial sector is still far away from reaching the point of saturation in the AI markets. According to McKinsey, today's consumers do not buy just the products or services. More and more, their purchase decisions revolve around buying into an idea and an experience. From a company that did not believe in a sales team to expand to 50 hires and making positive results, there's no doubt that Palantir has the capacity to grow from its current valuation. Overall, I've never been more excited in the stock. I'm super confident that Palantir's revenue momentum is here to stay and will remain above 30% for 2021. To me, with the growth that I'm expecting and the total addressable market estimated to be $120 billion, I fully expect Palantir to surge past $100 eventually in the long run. If that happens, all I ask from you guys is a thumbs up button and for you guys to subscribe to my channel. If Palantir stock ever hit below $20, I'll definitely be buying this stock aggressively. That's all I have for this video. Till next time.